All right, traders, good day. Welcome back to the live trading room. Hope you guys had a great weekend. For those of you that I didn't see yesterday, live streamers on YouTube and TradingView, welcome back. It's been a while. I don't think I live streamed at all last week, but getting back and doing it today. We'll see if it goes on for the rest of the week or not, but thank you guys for joining. And of course, live room members, appreciate you guys being here as always. We got a few things we're going to look at in the market today. So let's hop into it. First and foremost, just taking a look at the economic calendar. Nothing too major on the board for today. We have a lot of Fed members speaking, which is always has the potential to rock the markets a little bit. We saw that last week. The one thing I'd pay attention to, and this is going to be late in the day, is going to be our New Zealand dollar interest rate change. They've got a hike later tonight, at least tonight my time, 9 p.m. my time. Always interesting. Not much in the rate change, but when you do have a major news event with or during a period of low liquidity, there's always the chance that the market could make a lot more out of it than it typically would. So just double check those stops, double check those overnight orders to make sure everything is in place if you're trading one of those pairs. We're going to start today with a metal, right? We're going to start with silver. Silver is interesting. At least it was interesting this morning. We'll see. Yes, silver is interesting here. We'll start here, then we'll go around to a few other pairs. Probably do dollar Canada next, since that's one that I'm looking to actually trade if it's still the same. But silver is interesting here, right? So silver on a daily, right? You've seen we've broken out of this upper range, and we've started to put in a little bit of a consolidation, right? Price action has put in a new structure low here. We've retraced, new structure low here, and we're kind of putting in this complex pullback, right? We had what we thought was a retracement. It could still be a retracement, but we never got a follow through on the extension, showing us that, hey, we may be in line for some sorts of consolidation. We then broke past those highs, and we are now flirting, I guess more than flirting, we are touching the previous highs of our outside return right here. Now, if you look closely, do you guys see anything else that is here on silver potentially? Not potentially, something else that is here. Yep, we have an advanced pattern formation. We have a bear Gartley pattern. We have a deep bear Gartley pattern. So again, this first move down is going to be our X to A. This is going to be our impulse leg. This is going to be, for you guys that are unfamiliar with patterns, this is going to be the starting point of our advanced pattern formation, this move right here, this swing high to swing low. This first retracement is going to be our B leg. You can see it's a deep Gartley because it almost comes to the 786, which would invalidate the pattern and transform it into something else. But we do not hit it, so it is still valid. We have a push down here for our C leg. I got a question about this over the weekend. I showed you guys what pound dollar over the weekend, and someone had a question about why is the dollar Swiss not a W or M-shaped pattern as well, and it was because the C leg was invalid. So it's very important we understand these rules and we stick to them. And then finally, the decompletion, right? Because we have that deeper B leg, that's going to push our decompletion up a little bit, right? Looking at that 127, putting us right up here near the highs. And the good thing about a deep advanced pattern formation is that it gives you a much better risk reward because your risk doesn't really change. Your reward is going to be still kind of a similar ratio, 3-2, and it puts you a lot closer to those highs, that protective area. Now, depending on how you trade advanced pattern formations, this could be either still valid or invalid for you, right? For me, my rule is that if we breach, if we poke past, prod past, if we push past, however you want to use it, they all happen to be P words for some reason, then it is invalid. So in this case, you can see that horizontal white line, which I'll soon choose as something else to make it a little clearer. Our horizontal blue line right here is the high of our X leg. You can see price has pushed past the high of that X leg, making it invalid for me. However, another rule that you can use is kind of the same rule that we use for reading a price chart in general, is that an advanced pattern is still valid until you get a break and a close above, right? So this would be a break above, but not a close above. Your rule for invalidation can certainly be a break and close above. So the Gartley is not what I want to talk about. It's cool. It's there. It's tradable. But I want to give some perspective of how that works into what's happening on the lower time frame. Because if we jump one lower time frame or one time frame lower, I guess not one time frame, one of my time frames lower, right? We're going to see something else, right? What else do we see? We see that D leg pushing up with a lot of strength, right? And then we start to see the candle size decrease. We start to see the slope of the candles decrease. And this is a classic sign of loss of momentum, loss of MOMO. And again, not only is it a sign of loss of momentum, but we know that's loss of momentum at a pattern completion zone. We also know that it's loss of momentum at a previous level of structure resistance, which is where we want to see it at. Now, next question, and this is going to be one that only you can answer, is how do you get involved? And there's many ways to do it. One way that would stand out is a lower low, lower close. So we're currently printing a red candle right now. If you were to get a lower low, lower close, that would be a positive sign. It's not a sign that it's going to win. Trust me, if it were, this would be the number one trading strategy in the world. But that is a positive sign that price is likely to go in your favor, more positive than continuing to put in green candles or an inside bar. So you can think about that in advance. This is the cool thing about trading a 4-hour chart, right? You still got, an hour and a half before this closes. So you have plenty of time to do things out. So you can mark out your risk. You can mark out your reward. You can see if you get a lower low, lower close, and depending how low it occurs, is the risk reward ratio going to be worth it? Now, in my opinion, what I would be shooting for, or let me ask you guys this first, right? If you're shooting for price to go lower, in this scenario, where would you be looking for price to go lower to? I'm going to delete our chart so we have a clean canvas. But where would you guys be looking for targets in this area? What level or levels? I don't want to give you the answer. I want to make you guys think. By the way, if you're watching on YouTube, support me, please. Hit that like button. Also, check out the YouTube Shorts channel as well. George says 1980s. 1980s, around my birthday decade, the 1980s. 1980s is going to be right in here. Boom. Inside structure here. Anyone else? Don't be shy. There's no wrong answer unless you say above, because then you can't short to get above. That would be a wrong answer. Got a few more people typing in. But I think we're all, in general, viewing the same area, right? We're all looking at somewhere between here and here, would be my guess. Would you guys agree? Somewhere between these highs right here and this consolidative level in there. Yep. And that's half the battle, right? Half the battle is pinpointing that general level, or picking that general level, and then pinpointing the level with us inside of that. So once you have this, right, you narrow down your search. Now you can use other things as confluence. So if you like a particular level, like the highs, if you like kind of the start before this candle, if you want to bring in a Fibonacci and say, hey, Fibonacci retracement, do we have any confluence in that area? I got a 3D2 at 1985, right? Maybe I adjust to that. Right? That's where you start making those small differences. If you're going to use volume or something of that sort, that's where you start making those small differences to pinpoint where in that area you'd like to get involved, or I guess in this case, out of the trade at. So decent trading opportunity here. Another method, because we've been talking about this lately, right? If you're someone, because rising channels, falling channels, those things are often difficult to trade. Um, this is a pretty smooth one, but you don't, and I don't know if this is going to end up being a lower low, lower close, but a lot of them don't end up giving you that. They kind of just tread water and then collapse on themselves. Another method that you can use is we've been talking about indicators a lot, right? Different ways to use them, right? RSI crossing back below the oversold line. That could be an entry reason, right? You're watching this. This is losing momentum, right? Your RSI should be losing momentum as well, right? It should be hitting its highs and finding its apex and starting to bend off. Well, slamming back down below the 80, had that loss of strength, could be an entry signal for you. That combined with a candlestick could be an entry signal for you. Same thing with what we talked about yesterday in the Q&A, right? The stochastics cross, right? You have your K right here. Wait for the K to cross the D, or wait for the K to cross the D and for the break back under the 80 line. That could be an entry reason or an entry confirmation as well. So endless ways you can look at it. Again, if you didn't see yesterday's private Q&A session, we actually did a live walkthrough of the pre-back testing phase when it comes to strategy development, and just brainstormed a bunch of ideas. Talked about how we play around in the sandbox, and how the ability to go through a price chart and see different opportunities opens up creativity and allows us to think outside the box and really kind of imagine the different ways that we can trade and ultimately optimize a strategy. Of course, you can also drop down to a lower time frame as well. Let's say an hourly, and look for something more specific down here as well. Maybe even a double top or something like that. So different ways to trade this. Real quick, Orsa says, first target at the start of the high Momo candle right here, 1966, well before I was born. Then down to not the start, the right here, the top of it. Sorry about that. Sorry, the top of the high momentum candle, so 2050s, and then looking for a move down to the 1980s for her secondary target. So that's what's happening on silver this morning. Any questions before we move on? Probably gonna go to dollar Canada next, but we've got some funky stuff happening. We got some cool reversal patterns on Aussie and New Zealand as well. Although, again, New Zealand's a little bit tricky because of the interest rates. But actually, Canada yen, that's another good one to go to. Maybe we'll go to that next. But any questions on silver before we move on? All right, perfect. Live streamers, almost forgot to do this because it's been so long since we've live streamed, but going to boot you out. Again, if you have any questions or comments, leave it below about anything we discussed here today or anything in general. I do read through them. Do me a favor, hit that like button if you're already subscribed. If you're not subscribed, do it. That way you don't miss the next sessions. Live room members, dollar Canada or Canada yen. I'll let you choose. Where do you want to go to next?